Welcome to CFP Exam Prep. Today we're diving deep into 401k plans, specifically focusing on employee deferrals, employer matching, and those critical non-discrimination tests that often show up on the exam. Let's break down the core concept of employee deferrals in 401k plans. Traditional 401k deferrals are made with pre-tax dollars, reducing the employee's current taxable income. The maximum employee deferral limit for 2024 is $23,000, with an additional catch-up contribution of $7,500 for those 50 and older. These amounts are adjusted periodically for inflation. A key feature that makes 401k plans attractive is employer matching. Many employers match employee contributions, often using formulas like 50 cents on the dollar up to 6% of compensation. When analyzing matching formulas on the exam, remember that the employer match is calculated based on the employee's compensation, not their actual deferral amount. Now let's tackle the non-discrimination testing that frequently trips up test takers. The actual deferral percentage test, or ADP test, compares the average deferral rates of highly compensated employees to non-highly compensated employees. The difference can't exceed certain permitted spreads. For example, if non-highly compensated employees defer an average of 3%, highly compensated employees can't defer more than 5%. The actual contribution percentage test, or ACP test, works similarly, but focuses on employer matching contributions and after-tax employee contributions. These tests ensure the plan doesn't unfairly benefit higher-paid employees. Here's a common exam scenario. A company's non-highly compensated employees have an average deferral rate of 4%. The highly compensated employees' average is 7%. This would fail the ADP test because the difference exceeds the allowable spread. The plan would need corrective action, such as returning excess contributions to highly compensated employees or making additional employer contributions. Many test takers make the mistake of confusing safe harbor 401k plans with traditional 401k plans. Safe harbor plans automatically pass ADP and ACP tests if they meet specific employer contribution requirements. These include either a 3% non-elective contribution to all eligible employees or a basic matching formula of 100% on the first 3% plus 50% on the next 2%. Another common error is misunderstanding the timing of corrective distributions. If a plan fails ADP or ACP testing, corrections must be made within 12 months after the end of the plan year. Returning excess contributions to highly compensated employees is taxable in the year distributed, not the year contributed. Remember this key point for the exam. The IRS considers a plan top-heavy if more than 60% of the account balances belong to key employees. Top-heavy plans must provide minimum contributions to non-key employees, typically 3% of compensation. For real-world application and exam success, understand that these rules serve to promote broad-based retirement savings across all employee income levels. The testing requirements ensure that retirement benefits are distributed fairly among all employees, not just those at the top of the organization. Stay sharp on these testing thresholds, correction methods, and safe harbor requirements. They're fundamental to 401k, plan administration, and frequently appear in complex exam questions. Remember, the goal of these regulations is to create equity in retirement savings opportunities across all employee groups.